Hello, everyone. Welcome to the market opening bell on Wednesday, September 17th, your 10-minute guide to the stock market. China and the United States concluded 2 days of trade talks in Madrid, Spain, reaching an agreement on the TikTok issue. On Tuesday, U.S. Treasury Secretary Bessent expressed confidence that both sides will resume negotiations before mutual tariffs take effect in November, aiming to secure a trade agreement. The Hang Seng Index opened 90 points higher on Tuesday, reaching a four-year high of 26,601 points, with a peak gain of 155 points, but later dipped 114 points to 26,332. It closed down 8 points at 26,438. The H-share index edged up 1 point to 9,386, while the Hang Seng Tech Index rose 34 points or 0.6% to 6,077. Total market turnover was 294 billion Hong Kong dollars. Southbound funds recorded a net sell-off of 31.89 billion Hong Kong dollars in Hong Kong stocks. Notable net purchases included Alibaba at 30.31 billion, Meituan at 7.15 billion, Bayset Health at 3.27 billion, TYK Medicines at 2.96 billion, and Brain Aurora at 1.25 billion. On the other hand, net sell-offs included Tracker Fund at 46.39 billion, Xiaomi at 5.69 billion, SMIC at 4.12 billion, and Tencent at 3.86 billion. Data shows southbound funds have been net buying Alibaba for 18 consecutive days, totaling $49.839 billion. From a technical perspective, the Hang Seng Index has not managed to hold above 26,500 points, suggesting further consolidation may be needed with support seen at 26,200 points. In the Asia market, the three major indexes were soft in the morning but stabilized in the afternoon. The Shanghai Composite Index closed at 3,861 points, up slightly by 1 point or 0.04%. The Shenzhen Component Index rose 58 points or 0.5% to 13,063, while the Chinex Index gained 20 points or 0.7% to 3,087. Combined turnover for the Shanghai and Shenzhen markets reached 2.34 trillion yuan. The renminbi central parity rate was set at 7.1027 per US dollar, appreciating 29 points from the previous day's rate of 7.1056. According to insiders, Alibaba founder Jack Ma, who has largely stayed out of the public eye for years, has returned to Alibaba's campus. His direct involvement in the company is reportedly at its strongest in 5 years, most notably reflected in Alibaba's shift toward artificial intelligence (AI) and its competitive stance against competitive rivals JD.com and Meituan. This includes launching up to 50 billion yuan in subsidies to counter JD's sudden entry into the food delivery market. Reports indicate that Alibaba's internal message board displays the slogan "Mega, Make Alibaba Great Again." Meituan opened 0.7% higher, with gains extending in the afternoon, peaking at 101.8 Hong Kong dollars for a 4.6% surge and closing at $100.3, up 3%. Meituan's international food delivery brand Kita officially entered the Kuwait market on September 15, marking its third Gulf Cooperation Council market entry, just under a month after launching in Qatar on August 19th. This reflects Meituan's aggressive overseas expansion. Despite intensifying competition in mainland China, Kita now operates in Saudi Arabia, Qatar, and Kuwait, with its Saudi operations expanding to over 20 cities in just a few months, becoming one of the leading delivery platforms there. On its first day in Kuwait, Kita topped the iOS and Google Play food and beverage app download charts, while maintaining the top spot in Qatar and Saudi Arabia, signaling strong user growth momentum in the Middle East. Notably, nearly a year after launching in Saudi Arabia, Kita remains the most downloaded delivery platform there, further demonstrating its user retention and growth resilience. Renowned Apple analyst Ming-Chi Kuo posted on the social platform X that pre-order demand for the iPhone 17 series over its first weekend surpassed that of last year's iPhone 16 series. He noted that third quarter production plans for the Pro Max, Pro and Standard models are up approximately 25% year on year, with delivery wait times about 1 week longer, indicating stronger demand for these three models. While the iPhone Air has inventory suggesting weaker demand compared to last year's iPhone 16 Plus, its third quarter production plan is roughly double that of the iPhone 16 Plus, requiring more time to assess sales performance. The iPhone 17 Pro Max remains the most in demand model, with third quarter production up about 60% from last year's iPhone 16 Pro Max, though wait times are similar. Quote, Guo also pointed out that the stronger pre-order performance of the iPhone 17 series should support Apple's third quarter earnings, but the uplift to supplier stock prices may be limited as investors await product changes next year's cycle and their potential benefits to the supply chain. Xiaomi announced the upcoming launch of its flagship Xiaomi 17 series this month, comprising three models: Xiaomi 17, Xiaomi 17 Pro, and Xiaomi 17 Pro Max. These will feature the global debut of the Snapdragon 8 Gen 5 Supreme Edition platform. The company revealed the new design on Weibo yesterday, highlighting a new Magic Back screen. Rumors suggest Xiaomi will hold a launch event on September 25th. The newly listed stock Health 160 closed at $29 in Phillip Mark's gray market trading yesterday, up 143.9% or $17.11 from its IPO price. Excluding fees, a 250 share lot would yield a paper profit of 4,277.5 Hong Kong dollars. Ahead of the Federal Reserve's interest rate decision, investors took profits, leading to a softer performance in U.S. stocks on Tuesday. The S&P 500 hit the record high of 6,626 points before turning lower, closing at 6,606 points, down 8 points. The Nasdaq also reached a new high before declining, closing at 22,333 points, down 14 points. The Dow fell 125 points or 0.3% to 45,757. Tech stocks face broad pressure, with Nvidia dropping 1.6%. Reports suggest Nvidia's latest China-specific AI chip, RTX 6000D, has received a lukewarm response, with some major tech firms opting not to pre-order. The chip designed for AI inference is reportedly expensive and underperforms compared to the RTX 5090, which is banned for sale in China but available on the grey market at less than half the RTX 6000D's price of around 50,000 yuan. Alibaba, Tencent, and ByteDance are also awaiting approval for orders of another China-specific chip, the H20, while hoping the US approves the sale of the B30A chip to China. Microsoft fell 1.2%, while Alphabet announced a £5 billion investment in the UK's AI sector for infrastructure and scientific research over the next 2 years, part of several large-scale investments announced ahead of US President Trump's state visit to the UK. Alphabet stock dipped 0.1%. Tesla continued to rise, gaining over 2.8%. Oracle, reportedly assisting TikTok to continue operations in the US, saw its stock rise 1.5%. On the economic data front, US retail sales for August rose 0.6% month on month, matching July's revised 0.6% increase and exceeding market expectations of a 0.2% rise. August industrial production grew 0.1%, surpassing market expectations of a 0.1% decline and improving from July's revised 0.4% drop. Capacity utilization remains steady at 77.4%, in line with July's revised figure and market expectations, though 2.2 percentage points below its long-term average. U.S. business inventories in July rose 0.2% month-on-month, consistent with June's increase in market expectations, marking 2 consecutive months of growth. Manufacturers' inventories grew 0.3%, retailers by 0.2%, and wholesalers by 0.1%. Year-on-year, July total business inventories rose 1.5%, slightly below the initial forecast of 1.6%. August import prices increased 0.3% month-on-month, following June's revised 0.2% rise, exceeding market expectations of a 0.1% decline and marking the largest increase since January. This suggests foreign companies have not lowered costs despite tariffs from the Trump administration, as the index excludes commodity taxes. The NAHB Wells Fargo Housing Market Index for September remained flat at 32, consistent with August and June, matching its lowest level since December 2022. The data fell short of market expectations of 33, highlighting ongoing weakness in the housing market. Today, our stock pick is Leads Biolabs, stock code 9887. Leads Biolabs primarily engages in biopharmaceutical business, focusing on advancing breakthrough cancer therapies to improve patient outcomes. The group deploys a variety of combination treatment strategies, including bispecific antibodies, T-cell engagers (TCE), and antibody-drug conjugates (ADC), while seeking new targets and mechanisms. Since its establishment, the group has adopted a core scientific strategy of converting cold tumors into hot tumors to address the limitations of PD-1, PD-L1 inhibitors. This approach helps restore T-cell function and increase their numbers, transforming a small inactive cell population into a large active immune cell population. Unlike PD-1, PD-L1 inhibitors, which do not increase T-cell numbers, this method aims to massively activate and enhance anti-tumor immunity. Over the past decade, the group has established a proprietary technology platform based on this core logic to address significant unmet medical needs and achieve outstanding clinical results. Leveraging its proprietary technology platform, the group has developed a well-designed and differentiated pipeline. Among the 6 projects that have entered clinical stages, 3 have shown first-in-class or best-in-class potential, indicating a high likelihood of R&D success. As of June 30, 2025, the group has 1 core product, Opium and 13 other drug candidates. Of these 14 candidates, 6 have successfully entered clinical stages, while 8 are in preclinical stages. The group is currently evaluating the efficacy of its core product, LBL-024, as a monotherapy or part of combination therapies for treating extrapulmonary neuroendocrine carcinoma, small cell lung cancer, biliary tract cancer, non-small cell lung cancer, hepatocellular carcinoma, melanoma, ovarian cancer, triple-negative breast cancer, esophageal squamous cell carcinoma, gastric cancer, and other solid tumors. Notably, LBL-C024 entered a single-arm pivotal clinical trial for extrapulmonary neuroendocrine carcinoma in July 2024, becoming the world's first 4-1BB targeted candidate to reach the pivotal clinical stage, with patient enrollment completed in August 2025. LBL-024 may also become the first approved drug for treating extrapulmonary neuroendocrine carcinoma, a cancer type with a high unmet medical need. Additionally, in October 2024, LBL-024 received Breakthrough Therapy Designation (BTD) from the NMPA for second-line treatment of extrapulmonary neuroendocrine neuroendocrine carcinoma, and in November 2024, it received Orphan Drug Designation (ODD) from the FDA for treating neuroendocrine carcinoma. In terms of operational business model, the group continues to adhere to a light asset strategy while developing manufacturing and commercialization capabilities, providing significant advantages in economic feasibility and operational efficiency. To date, the group has established its own GMP-compliant pilot production facility for early clinical development of selected drug candidates. The pilot plant has an annual production capacity of up to 20 batches using single 200-liter or 500-liter disposable bioreactors. Recommended buy price $66.5, target price $73.5, stop loss price $63.5. I do not hold the aforementioned stock.